For clients that are just turning on their Social Security benefit, one of the most common questions that we receive is, should I be withholding tax from my Social Security benefit? If the answer is yes, what amount should I be withholding? How do I even go about requesting that they withhold the amount? So in the video today, we're going to be going through all those items in addition to if you're not withholding tax from Social Security, you may have to be making estimated tax payments 4 times a year. Otherwise, you could face penalties from the IRS. Hello, everyone. I am Michael Ruger. I am the managing partner of Greenbush Financial Group. And the reason why this is such a key topic is sometimes people are even surprised to find out that Social Security is taxable. So a lot of people do pay Fed income tax on their Social Security benefit. And depending on what state you live in, you may also owe state tax on some of your Social Security benefits. So that's why this tax topic is so important. Because many taxpayers do have to pay Fed income tax on their Social Security benefit, they do allow you to withhold taxes directly from that Social Security payment, but they only offer you 4 withholding options. So option number 1 is 7%, option 2 is 10%, option 3 is 12%, and option 4 is 22%. This tax withholding is completely voluntary, but for retirees that are now on a fixed income, by remitting the money directly from their Social Security benefit, they could avoid a big tax liability that they have to pay when they go to file their taxes for that tax year. How much of your Social Security is subject to taxation at the federal level is dependent on your provisional income amount. So there's a whole formula I'm going to go through with you, but just kind of know some individuals don't pay any tax to the federal government on their Social Security. Some 50% of their Social Security benefit is taxable, and others 85% of their Social Security benefit is taxable at the federal level. What percentage you fall into is dictated by this provisional income formula, which is your adjusted gross income, AGI, plus any tax-exempt interest, plus 50% of the actual Social Security benefit that was received. Once you run that income formula, there are different thresholds for single filers versus married filing joint. So for single filers, if you make under $25,000 in that provisional income formula, 0% of your Social Security is taxable. Between $25,000 and $34,000, 50% of your Social Security is taxable, and anything above $34,000, 85% of your Social Security benefit is taxable at the federal level. For married filing joint, if your provisional income is below $32,000 per year, 0% of your Social Security benefit is taxable. Between $32,000 and $44,000, 50% of your benefit is taxable. And once you're above $44,000 in provisional income, up to 85% of your benefit is taxable at the federal level. So even for the top income earners, they are still only paying tax on 85% of that Social Security benefit. No one pays tax on 100% of it, which could factor in to your withholding decision when you're running those estimated tax calculations. Now, what I just covered was taxation at the federal level. Now, fortunately, most states do not tax Social Security at the state level, but there's still 12 states out there that tax Social Security in some form. And here is the list of the states that range from Colorado all the way to Wisconsin. And they each have their own rules, income thresholds, exemptions. So you have to look at it depending on what state that you reside in. Now, if your Social Security benefit is subject to taxation and you fail to elect into the voluntary federal tax withholding, meaning the government's not getting any of their taxes during the year, you may have to remit what's called estimated tax payments 4 times a year to remit that federal tax and potentially state tax that's due on that Social Security benefit. Otherwise, you could face penalties. And those estimated tax deadlines are April 15th, June 15th, September 15th, and January 15th. If you want to elect the voluntary Fed tax withholding from your Social Security benefits, there's 2 ways to do it. So number 1 is you can do it online. You can log into the Social Security account and just update your withholding preferences electronically. Or there's also a paper form. You complete IRS form W4V, which is the voluntary withholding request, and mail it into your Social Security office. If your provisional income places you at a level where a portion of your Social Security benefit is taxable at the federal level, but you failed to elect voluntary withholding from your payments and you didn't make estimated payments, you could face underpayment penalties when you go to file your taxes for that tax year. The withholding solution is a one-size-fits-all for all retirees. So for a lot of retirees, it is most convenient to just have it withheld from your Social Security benefits. So one is being remitted regularly, and then you don't have to worry about a big tax liability when you go to file your taxes. But know that that tax liability can also be impacted by other sources of income you might have. If you're doing IRA distributions and you're withholding a lot of taxes against those IRA distributions, that could offset some of the tax liability that's due on the Social Security side. So again, you have to assess your own personal situation when making this decision. I hope this information was helpful. If you have any questions, please feel free to reach out to me at greenbushfinancial.com. Thank you.